So here is my reaction to the CPI rate this morning, and also the markets crashing. What do you think? We've lost a lot of money on my portfolio this morning, and in fact all day. And what do you think? I'd love your comments below, and I thought I'd make a reaction to this video. It is important to note that the US economy, as amazing as the US economy is, it is one of the most dramatic and volatile economies on the planet Earth. In America, we love to react and be dramatic, bigger and better in Texas, as they say, which is where I'm from here in Dallas, Texas. But today the markets reacted. And let's get a bit of insight and reaction to that, and I will share my thoughts with this video. What do you think of this? Here we go.
No, it's a little warmer than expected, but I'm not going to call 0.1% of an increase in prices a hot inflation report. What's happening is it's cooling. There are just a few hot spots. There are problems in getting all of inflation to come down, but the cooling trend is there. I think markets are overreacting to this. In particular, there's a big chunk of inflation, the CPI, 32% is in shelter, and that's up 0.7%. And that's really what's driving a lot of the underlying resilience of inflation here. But a lot of that is, owner's equivalent rent. It's a very, almost a mythical concept because nobody actually pays owner's equivalent rent. So there are parts of inflation hanging on, but I think it's really important to recognize the economy is cooling here, and a lot of the things that pushed up inflation are cooling off also. So
let's just pick it up at this point. The markets have reacted today and quite possibly overreacted. What do you think? Leave your comments below. I feel that, yes, I think we do have a global problem. We do have inflation at the moment. We have a war in the Ukraine possibly being one, Russia pushing back or being pushed back. And I feel that the good times are around the corner. We've had months and months and months of sell-offs now. And one thing that the market does very, very well is react. And the way to stay calm and the way to hold your positions is simply do not buy the pumps we had yesterday before today, and also not to overreact and sell everything, which is what everyone's doing. Remember, a lot of people have lost a lot of money. A lot of people are fearful. A lot of people are greedy. A lot of people are not concerned about everybody else. And if we only held the positions, this wouldn't happen. Everyone's now running to the hills. Well, if you put your money under the bed and you come out of the stock market, you're certainly not going to get your money back. It's not going to make no difference. For me, I've just held my positions. In fact, I bought Virgin Galactic today, which went down dramatically again today on this overreaction, and I've improved my position, but I haven't sold out of anything. I've held my positions. I did sell some Arrival today, but that's a completely different story. Anyway, let's pick up a bit more of this.
We shouldn't get messed up by the fact that it was a little higher than consensus here. The big story here is inflation is actually coming down.
David, that is convenient for a lot of the bulls, and yet the story that people are seeing right now is that the hope was we would see a much faster disinflation that would get the Fed not perhaps raising rates as much as they were saying.
Just going to jump in on this point here. This whole thing, bulls and bears and perma-bulls and perma-bears. I hate that. I hate labeling, or just because I'm an optimist and I believe overall in the economies of the world, I'm regarded as a perma-bull. I hate that. I think it's ridiculous. The fact of the matter is we do have inflation, but as you just heard there from J.P. Morgan, inflation is cooling, and to use the phrase "it's convenient." This is the whole thing with the stock market. This is what you have to understand. Everyone's poking and pointing at somebody else rather than taking responsibility for their own portfolios. The fact of the matter is, everybody, a huge sector of the market today sold off, and we all jumped ship, and it drove the markets down. The markets only go up when you buy in, and they only go down when people sell off. Simple as that. We need to understand why we invested in the first place and have no fear. And I was once told by a manager of the stock market that worked on Wall Street. He said, never get in the pit, always be on the outside as a manager, calm and sail the ship steady. The people that are on the floor fighting and screaming and shouting and ins and outs and ups and downs create the chaos. And it's the chaos that drive the markets down. We need stability right now. And that is the wonderful thing about the US. It does present a very volatile, very violent at times stock market, but it also presents great opportunity. If you stand back, calm down and relax, it'll all come well in the end.
How can you lean against this? What parts of the market are most overreacting from your perspective?
Well, you mentioned financials, and I think what's going on is people are assuming that this will make the Fed a bit more hawkish, and I think that's true. I mean, I think that the Fed will now have more of reason to go 75 basis points next week, and I think that's what they'll do. I think the ECB obviously just did that. I think the Bank of England will do the same. But I think the Fed will also leave the door open to a smaller increase in November, maybe 50 basis points, maybe 25 basis points in December, because what they are going to see is inflation continuing actually to cool, because that's actually what's going on. I think we'll get about 0.2% in the September read. Energy prices are going to be down month over month in September also. I think we'll see the airline fares come down a bit more. I think lodging will come down a bit more. We've got a big increase in tobacco prices. No reason why we'll get that 2 months in a row. So I just think we're overreacting to this. Yes, it wasn't good news on inflation. It was worse than expected. But the big trend here is coming down. I think financials are overreacting. I have no problem with the 10-year Treasury up near 350. I think that's okay. But I think the assumption that somehow we're not dealing with inflation or it's going to get worse, I think is just wrong.
So there you have it, J.P. Morgan's opinion of where they see the markets going. I've always said spend time building the foundations. Stop worrying about the frills and the tinsel and the roof on the top. Keep building the foundations. And if you can go through the toughest of times and survive, you'll come out stronger. And right now, I welcome all this because at the end of the day, this presents me with the opportunity to buy cheap stocks. I didn't buy very much today. In fact, I only bought Virgin Galactic a few times. It went down. That's all I bought today. I was already so far ahead with my other stocks. It wasn't low enough for me. So I'm not buying the pump if there is any for me, and I'm just buying quality stocks that have gone cheaper due to all this drama. So as far as I'm concerned, as you heard there from J.P. Morgan, come October, November, December, because of this drama, we're more likely to see a much more positive end to the year. And remember, traditionally, September is a hard month. So if you've managed to survive today, you've probably strengthened your positions. You've probably got better deals and bought the dips. I hope you have anyway. At least don't buy the pumps. If you are already up on a stock comfortably, you shouldn't be buying today because it hasn't gone low enough. But if you've taken advantage on some of your stocks that have gone dramatically down today, like for me, Virgin Galactic was down like 7-8%, that was a good time for me to pick that up. Otherwise, stand back, and not be fearful. Come next month and the month after, and certainly in December, always a good month on the markets, I think we're going to be in a very different place. So for me, today was dramatic. I hated to see, it wasn't very comfortable to see so much of my portfolio wiped out today, but I've held my position. I haven't gone anywhere. I haven't sold out. And as Warren Buffett always said, he loves the red days. The red days is when you are building for the future. The green days, you simply sit back and relax and watch your money go up. Red days is when you dig in and prepare. And it always has been about preparing for the future. At least that's what investing should be about. It's not gambling. We are investing in the future. So today I invested more in my future. Today wasn't a bad day. It was painful to watch. It was dramatic, but it presented you with the opportunities to dig in, build the foundations, and get better for a better future. Take care of yourselves and each other.